Everyone. Welcome to today's segment. My name is Boris. I'm a professional trader and analyst focusing on the cryptocurrency space. But today I won't really be focusing on talking about crypto. I'll be focusing on talking with my great friend and colleague, Marcello Cremi, who is from Italy. And he has quite an impressive background in trading and investing. And he has many, many years of experience to share with us. So this segment will just be about me and him talking about trading and his experiences. And it's going to be just a conversation about trading and investing and about the markets. So first of all, Marcello, welcome to the stream. Thank you for being here.
Thank you, Boris. Thank you for like the introduction. It was like very nice, and it's all a lie. We know that. So
No, I don't think so, man. You're the real deal. Since this is a trading focused show, can you please tell us about just how you got started in trading, how you got started investing, what ignited the passion within you to go down
well,
this career path?
actually, it's a nice story. It's related to my father. He used to
Hmm.
work for like one of the biggest oil and gas Italian company in Italy. It's called Eni, and by
Hmm.
then, employees get discounted shares. And so we used to monitor the price on like a special TV section where you could check the updated value, but it was probably like old. I'm talking about like I was 6 or 7, so like 25, 30 years ago. And it was cool watching like every week it was going up and then going down, and I was trying to tell him, oh, just sell it now. I think it doubled up. So, but I didn't know anything. I was just saying like, oh, you know that it's good, it's good price, sell it. And he
Hmm.
actually sold it, and I think he bought like a brand new car. If you have kept it, he will be able to buy a new house, but that's another story. So that was my first interaction, and just my first touch of what was like a share, what was a stock. I didn't know anything, but
Hmm.
mm, the kind of like thought always like was recurrent. So after I graduated from high school, I wanted to do that when to see how to double up money, right? That's the main thing we always, well, everybody thinks, oh yeah, I'm gonna like do trading and double up money, I'm gonna get rich.
Hmm.
Which is, that it's not true, or like it's not like everything is like that. You
Yeah.
need to study, you need to be perseverant, especially you need to be very mind stable, which is like one of the huge problem nowadays. Even though with the electronic system now, with the automated like trading system, a lot of that part is being like mm, it can be sorted out. So like I said, after that I started like I graduated at corporate finance, financial markets in Italy. And then another thing, like I got lucky that I really started working in that same field. So I started like in a little like RIA firm in the brokerage department. So I was like a broker, a
Hmm.
stockbroker. So just passing the order through from the clients, from the management, and starting like to understand what was the book. I didn't even know what was a book. So you see the bid and ask, how it works, all the liquidity, the different kind of stocks, the asset classes, and that like you start developing. And I was lucky. I had like this old guy with these like little glasses, like kind of bold, and he was really like teaching me a lot. And for how I was, how I am, I'm very curious. So I always like asking question and getting deeper and deeper. And he knew a lot. And so I was even like, do you trade? Do you like do with your own money? He said, oh, no, it's just my job. I'm like, okay. And then, we really had like different personalities. I was fresh new from college, and he was very old mentality, very Catholic, very like religious. He just, going to work and family and work, nothing else, no distraction. And there was another thing that, it make you think, oh, he's very like, he doesn't get distractions. So, and he knows a lot of things. So he could actually be a very good trader for what I believe, for I've like learned in the future, thinking about him now. But he didn't have the kind of like risk adversity that he could have bring to do it like on his own. He was just like the classic working class guy, and he didn't realize how much knowledge he had, and he was just giving it to me, and I was like so happy about it. So, oh, he knows a lot of things. So from there, I moved to like starting working like in banks, which is like a better deal for in Italy as contract wise. But still, you see other, actually you see like other money involving. So you see like actually huge orders. Before, I got like a lot of orders for, maybe the biggest was like some 100,000, and then you see order of under a million, and then you realize, oh, you got to be serious, you got to be focused, and
Yeah.
even that the last cent, it's important to negotiate and to like make your own negotiation on that. So you need to take a break. It's no more like just numbers of in terms of quantities, it's quality. So you would start thinking, okay, like you need to be very precise, you need to be, like I said, very focused, you need to listen all the news, even because we were reporting directly to the CFO. We are our CFO in our own room, so we every day we talk to him. It wasn't like a big bank, but it was a well-known bank. So even that, having that possibility to work every day with your own CFO that was right on the end of your room, that makes you feel different as well. You have privilege. And I had the head of desk of the Treasury Department that it was right on my right, and he's another guy. He was super funny, super cool. He taught me a lot. He taught me a lot about like the market in general, and especially about bonds, because bonds was like one of the main thing that a bank was investing in, because of you know the um, the security that that it gives you, right? Like, so there was another knowledge that I acquired. So after that, I decide, okay, I'm ready. I want to take my own step to whatever comes next. And then I applied, and I even there, like I was lucky to be able to work as a trader in an hedge fund in Milan. So there was like the main financial, let's say, financial town, financial area in Italy. And working for an hedge fund, that was another big deal. I was
Yeah.
constantly watching the market. It was like the first time I was realized how important, or like how big it is, that job. Because I was in charge of the trading department. We weren't so many people, but still I had a couple of people that I gotta like report to, and they were reporting to me. And because our portfolio was invested mostly in the U.S. market and barely into the European markets, and even a part in the Asian markets. I really had to, be on the phone, constantly watching for news, seeing like how the markets were opening, the Asian, then the European market. Then I had to stay late to see the closure of the American markets, and watching the currency exchange rate, and where we were exposed, and then reading all the news, because like the main thing was investing into themes. So they have some themes they were like, the analysts were talking about. They were, doing their fundamental analysis, and I was in charge of the stock timing peaking, let's say. Let me tell you this.
Mhm.
So, they, of course, they picked the stocks, but because of that time now, the volatility was already high. They needed somebody to know when was the right time to buy or sell,
Mhm.
or to lower and like, um, you know, buy bigger portions. And that was me. So a lot of times I was trying to tell them, okay, I think based on like, I was doing my analysis. So I always start from, the big picture, starting like from the
Mhm.
monthly chart. During my like, trying to, I usually, I try to use like simple things, like divergences within like the prices and the RSI, and then as a price action, I try to see where there are like some breaking point of some support resistances, or either like triangles or rectangles. So, and lower you downsides all the time frame, so that you actually have like the real um, price action and price moment.
Mhm.
So, and they actually like it worked. It worked at, like, for the majority of the time, I was able to tell them, wait here, or like downsides here, or like, yeah, go in, whatever. And yeah, we did great. We did good deals. And after that, like I
Interesting.
said, initially working for a bank in Italy, it gives you a lot of like, it's like working for the federal state here in the US. So
Yeah.
you have a lot of benefits. It's like better contract. So I said, okay, I tried, their experience of like working hard, of like, focus on that, but then you gotta focus on yourself, because like I said,
Yeah.
the the mental stability is another, probably the most important thing in this field. So I had to reconnect with myself, and get my life back. So
So
I
sounds like you were working on
ended.
the Italian Wall Street. You were like, you-
Yeah,
you're like, yeah,
well, in the, if you want to say like that, I was actually like Milan. Like I said, it is it is where we have our old Wall Street. It's called Borsa Italiana.
hmm
And now, if everything is like electronic, whatever, but like there is like the actual, hometown of the Italian Stock Exchange, which has been acquired by the London Stock Exchange, but that's another story.
cool.
And
That's really cool
like I
because,
said,
like, if you're, yeah, go ahead.
no, I was just like finishing, and then like, well, my story, and then like I found an American girl, we got married, we had a baby,
Well,
and we moved to the
the
US.
audience doesn't know the story, so
Okay.
yeah, I guess that summarizes it.
Yeah,
So,
that's why we're here. And then I met this like amazing guy while we were working at CoinW, and I think I really had like an immediate connection with him, with you. And I recognize immediately how like all your knowledge, and even like your good heart, and being a good friend. So
yeah,
I'm really happy to like that you host me here. As I
of
don't know if
course.
it's your first uh, podcast or
No, yeah, this was
whatever.
my first one, and I decided Who am I gonna
So
go with? I'm gonna go with Marcello because
that's like that's
he,
another like
yeah.
good thing. And thank you, really, like it's made me feel special. And like I said, you are for me, so you're like a really good friend for me.
No, you are as well. But it's very interesting your experience, and especially you talked about working at a hedge fund, which brings me to my next question. So, obviously, with hedge funds, you had to manage very high net worth portfolios in the order of 65 million or even more, and so that's very different from managing your own portfolio or just it's just very different from retail trading. So, like, what is? Can you tell the audience like what's the secret to successful portfolio management? Which I guess might be a little bit different from day trading or even swing trading. Like, what was your secret to being successful at the Italian hedge funds and at the Italian trading firms that you worked at?
Well, definitely, like the main difference is that you have a company behind you, by yourself.
Hmm.
So day trading, you got to do everything by yourself. You got to like look for your own news. You need to like look for your data. You got to do all your analysis. And if you're lucky, you have like somebody like you and I can talk to. You we can share our impressions, our thoughts, and then elaborate our own strategies. But rather than that, you're really by yourself. And that goes back to what I said. Your, let's say, if you're not like mental stable, you don't have like a mentality that keeps you going on and think you're the best, you're good, you have knowledge, and you start, your skeleton in the closet start
Hmm.
saying, hey, are you sure about this? Do you want to double check, triple check?
Right,
Are you
right.
why the market is telling you this? And like you start losing money, and then you're losing money thinking, whoa, that's all my fault. That's like I'm stupid. You gotta you start thinking like the worst thing about yourself, and that's where it goes worst. And then even though like your strategy was good, and then maybe you have closed your position, or you set up like a wrong stop loss, and then all of a sudden it goes where you
Hmm.
were thinking
Yeah,
about. And you get even like more mad, because and then you re-enter at the like where you were supposed to actually sell. So you're
yeah.
like doing like the wrongest thing ever, trying to like following the trade when it's already it's already gone. You lost it. You gotta like move on. But then you don't move on because you think, oh, I was right. Yeah, with like 12 hours delayed, or like a
Mhm.
day of delayed, or a week of delayed. And that's something that when you're alone you think a lot about it. For sure you have more mobility, because like I said, you can do like you can open and close. If you're not sure, you close. Or if you want to sell, you sell. When you work for a company that you have hundreds of millions of dollars involved, for sure, like I said, you have the trading desk. You are in charge of the trading desk. Then you have the middle office, the back office, the management, the trading analyst, and plus you have all the connection that you have made on Bloomberg, and you just start charting, hey, what's going on today? What do you guys think about this and this and
Mhm.
this? And then you get like very high quality, right? I'm not saying that you like for sure, like I got lucky that I had you, but like say rather than that, you know, a retail trader usually goes on a forum with other retail traders that
Yeah.
maybe they didn't even have like a degrees, or they never were working like in a financial institution, and they just starting like comparing their own thought. I'm not saying they're wrong, like I wouldn't say that, because they're like very successful very highly successful trader that they really like don't know about economics in general. They don't even know how to, what is like, what is a bond? That should be, for me, it's something that everybody should know, since that, our economy is based on the debts that, we're giving away to others. But like I said, that's another story. And
Yeah. So I want to interrupt you here for a bit, and I want to ask you, like, so you're obviously managing like very large positions in the order of millions of dollars, not only for foreign currencies but also bonds and equities. So can like how did you utilize, I guess, how did you manage those positions on a institutional level? Because I think like the audience who are listening to this, they're operating on a retail level, so they don't necessarily know how risk management
so it's
works on
it's
an institutional level. So can you go
well,
go
for
into that a bit?
sure. Like I said, like before, there are like grades of decision making. So
Hmm.
for sure, the management says something, then you go through, the middle office, the back office, and the risk management office. And then if everybody say green lights, then they go to you, and you do, because of course something they don't know, especially is about the liquidity in the market, so when they say green light, you can do that, then you go on the market and say, okay, but because of the amount that I gotta buy, that risk, um, how can I say, the risk model needs to be changed, needs to be adjusted, considering that the volatility and the liquidity of that stock, it's different that you guys are assuming on your models.
Hmm.
And so then you need to go back. So like I said, it's a very different interaction and structure. So
Hmm.
usually, like, there is like a proper market. Okay, you don't go on the market. It's called block market. It's where, like, the big banks, they exchange, let's say, privately. It's a CFD. Okay, let's say, this, of course, the CFDs, because what's the word, we use in our retail banking, in retail trading. So it's a parallel market that, is just for financial institutions, and you just exchange big quantities, and you even have a minimum. So if you don't have a minimum of quantity you get, like, buy or sell, you don't even go through that. You go on the
Hmm.
normal market. But, like I said, financial
Interesting.
institution, when they have to exchange $1 million, they call block market. And so because they really like sell blocks of stocks, it could be bonds, it can be shares, wherever. You don't do it on the normal markets because, first of all, everybody will see on the book, everybody in the world. If you want to exchange, let's say, Facebook, Zuckerberg doesn't go on the normal market and push the button, say sell 200 million share of Facebook. Okay, he just tell the bank, okay, sell this, and then they will cure the order through other financial institution, through probably Bloomberg, okay, and the other institution who wants to buy the share will say, okay, yeah, I'll buy at that price. So part will go probably to BlackRock, part will go to other banks, right? So they
Hmm.
don't go on the market. Otherwise, itself, that the book is gonna be wiped out. There's gonna be no exchanging, even though it's super liquid. Okay, but it might affect. That's why, like, you see those news always goes after they happen, right? So you don't see, like, on the actual book what's going on. Say, why is going down, or like maybe it doesn't even do anything, and then realize later at 1 p.m. 1:01 p.m. there's been a big sell of Facebook shares, but you don't even see it. You go on the contracts, you actually you can check the contract time, all the exchange that have been, and then you don't see like a big block sold a certain point. One, because you're gonna like you will probably alterate the market, and so
Hmm.
the SEC is gonna come say, hey UMF, what you doing there? So all these things, and so it's more things involved. It's literally like another
Yeah.
system. It's literally another. It's even difficult to explain if you're not there, right? I'm trying to give it
Right.
some tips, some like knowledge, but it's more complicated. It's more,
Yeah.
and of course, because there are more money involved, so it's normal.
Yeah. It's like, yeah, that's really great, and that's really really interesting because, and that's why I wanted to bring you on because you had all this institutional trading experience that perhaps other viewers of this podcast don't have. So I really want to get an insight into how the institutional world works. So I guess, but you also had experience as a retail trader. So like, what do you think are like the main differences between just trading for your own account or just trading, on the retail side versus trading on the institutional side? And like, which do you prefer? Do you prefer trading for an institution or trading like on behalf of retail traders?
But for sure, like having your own money to trade, your own like freedom to do it whenever you want,
Hmm.
not having to report to anybody. For sure, like retail trading, it's way more satisfying, let's say. But as I said, you need to treat it as a real job, because most of the time, sometimes you don't do it. You like think it's a sort of game, which is not. So you need to really be prepared. You need to study. You need to like do your analysis deeply and deeply, and be serious, because actually it's your money, right? It's your own savings, so you gotta be careful. But for sure, like um, working for a big financial institution is still like it's cool. You get to see to experience things that normal people don't, and you feel lucky, and you actually, and even you start even more knowledge more about the market, how it works, how it can be affected from. So it's a combination of factors that helps you even with your like retail trading. And like I said, for it depends even like a lot of your character. I'm very extroverted. I like to talk. I like to interact with people,
Hmm.
and so being myself all day in front of a monitor with nobody to talk with, yeah, it's heavy for me. It's very it's I don't know. It for sure, like what we're saying in the beginning, like all those bad thoughts always come on your mind, because
Oh yeah,
you're not thinking right, because the environment you have here, and it's not what you want, or what I used to have as well, because I always had like people around me in all my jobs that you can talk to, you can like chat, whatever. And that, trust me, it's a big difference, where you have somebody, like I said, you
for
just
sure.
like you know taking out the eye from the monitor sometimes helps, but
Yeah, for sure.
sometimes,
And
a lot of times
that's
doesn't.
what I really enjoyed when we worked together at Coin W. Like I think we pretty much talked every day, and every time, like every day, there used to be some BS that happened in the crypto markets and Litecoin and Bitcoin or whatever other crypto you were trading, and we could just talk to each other and be like, "Oh man, this is awful." So that was really cool to actually
well,
you
let's
know,
say that
speak.
we weren't using awful as a word, but way worse thing. But
Yeah,
yeah,
yeah, for sure. So what I wanted to get into now is that you were talking about psychology before, even working for a hedge fund. So do you find like how do the psychological, I guess, psychological aspects of trading vary between the institutional level and the like retail level, like trading on your own versus trading on behalf of a company managing a lot of money? How does the is there like a bigger influence on your psychology working for a hedge fund versus working for yourself, or like what are your
it's
thoughts
a
on that?
it's a different sensation. It's a different like
Mhm.
it's a different mentality that you or like different thoughts because, like I said, being monitored and knowing that before trading something you have several level of let's say control on what you do, what you got to do. It helps you for sure. It's stressful. That's my daughter there. And so no, Sophie, okay, just say bye.
Oh, good. Hello.
Sorry, she likes trading. That's why she always
Yeah,
like
yeah,
wants to see
you have to teach
the
her.
green candles and the red candles.
She has a great
Sophie,
teacher
please.
right there.
Yeah. We'll cut this, okay? Please go back.
No,
Thank you, baby. Good night. So I was saying, it's a different thing, please, and definitely like knowing about like I said, like you have a different level of like control, and it's stressful because you're managing a lot of money, and
mhm,
let's say when you do something wrong, and then yeah, you your head off is gonna call you and say, "What did you do?" And then it's
mhm,
not that you can cancel the order, as you know. So you gotta like figure things out. It actually happened to me one time. It was really my first experience, and so it happened to me that I had to pass an order from the management, and it was like a really like big order, and it was a cure order. That means like I need to take care of, like I said, the timing, the quantity based on the book, because the stock wasn't like super liquid, so I had to do it like time by time, but I had to do it like through the day, so it had to be sold through the day. So what happened is that like I said, I was fresh from school. I didn't know anything, and I just click sell. Done. And so like the next day, my boss, which was the CEO, because like I said, it was like a small RIA. So like the CEO, the head of the investment, whatever, he called me and say, "Can you come to my office, Marcello?" I said, "Yes, boss."
mhm,
And so he said, "We got a call from basically the Italian SEC." I said, "Whoa, why?" "Yeah, because there has been like a big movement from on the stocks you were selling. Basically, like I think it was positive 1% or something, plus
mhm.
0.5, let's say, and then closed down minus 3%, just because I sold like this big quantity all at once, and there
Oh,
wasn't
wow.
so much liquidity. So there was like a big deal, and I was like, holy crap! Oh, I'm sorry. So, oh, you want to be on the news? You want to like be like, you're gonna go into jail? You want to be like, no, I'm sorry, it was a mistake. I said no. He made like
Mhm,
he made a joke. He said, don't do it again. It wasn't even like I said, like a very known stock, but it made me realize like, yeah, what I was doing, right? That talking about initially, like you need to be more money, more attention, meaning more precise. But when you're fresh off college, you didn't know. I was like, okay, I gotta sell this. I saw like, that, yeah, that I actually check even like the day before how like, the all the trades were like allocating. So they
Hmm.
actually they were a lot in the morning. So that's why I say, okay, let's sell it all. I didn't check the real quantities. I think I didn't realize like the quantity versus like the actual value. So I just went on like sell and nope.
Hmm.
So yeah,
Cool.
that was like a funny happy ending story, but it could have been no happy ending. Let's say that.
Yeah. Yeah, it definitely sounds like you have a lot of stories and experience to share from your days, like working for hedge funds and investment banks in Italy. But I guess like right now, let's actually go into like actual trading strategies, and I think that's what other traders really want to hear is like what was like your preferred trading strategy while working, not even just for hedge fund, but just for your own trading and investing. What is your, you don't have to reveal it if it's a secret, but like what is your like what is your
Well, I
strategy? What
actually
is your
already did reveal. Basically, like I have, like I said, it's very basic. It's nothing fancy. Not like you. I know you have like a very, super
uh,
nice, very detailed strategy that you never
uh,
wanted to share with me. I tried to like steal it from you
that's not true.
sometimes, but it was like quite complicated for me. So I was like, no, that's too much. That's what I
Hmm.
realized, like how good you were. I say, well, how you can read that. And I was like, oh, that's too much for me. And like I said, mostly like um, I was, I started like from, like I said, a big picture. So I start looking at the monthly and weekly charts, and then trying to basically see if there is like any divergences or any, actual current trend that the prices are like trading into it. And I, basically just like draw my trend lines,
Hmm.
and from there I like I say, like I downsides. I try to go lower on the time frames, and then I go on the daily, on the 4 hours, 1 hour. I don't go lower than usually 30 minutes, 15 minutes, except that if the stock is very volatile and liquid,
Hmm.
it might have sense do that. Otherwise, it doesn't make sense. It's just gonna like lose your money, or like it's gonna be lateral. You don't even see anything. So, and like I said, I try to follow the same strategy. The indicators I use, it's like I said, it's the RSI, which gives me
Hmm.
like in a combination with divergences with the price, and I use the Bollinger Bands as well. So basically, like there's mm, three elements. So let's say that there is a divergence on the prices. Like I was just monitoring the. Let me see if I can actually show you what I was doing, because I think I was trying to like analyze something on Ethereum. I don't know if I can
If you want, I
share
can pull it up
screen. Let's
on
see.
my screen. I'm not sure if you can do it on your end.
Yeah, okay. Yeah, go ahead, please. Like, pull me out the Ethereum. I was just looking
Sure.
at that
On
earlier.
what time frame?
Just
What time frame do you need?
just start from the monthly.
Monthly. Okay. Okay. And let me just switch my screen here for 1 second.
Oh,
All right.
great.
Do you see that?
Yes. So please put it on Bollinger Bands for me. You know, I like them. I know you don't like
Yeah,
them,
yeah.
but
Talking about
that's
is
my
it like a
episode.
rock
So
band? What is this bone?
no, it's the third one.
Oh,
Yeah, it's a rock band.
my
Yeah.
bad. Yeah,
There.
I
Okay.
think this is
All
it.
right. And
Yeah,
then the
there
other
we go.
side.
RSI. Okay. It's like an advanced RSI, but has a moving average.
Yeah.
But it's
Yeah, I
like
saw
the
that.
same thing. Okay.
Okay. Can you check? Is this the most liquid on Bitstamp?
Bitstamp is one of the
Let's.
longest running exchanges, so it should be pretty liquid. Yeah.
Okay. Great. So you can just see it from now. The maximum that Ethereum have done with the prices, and the top of the RSI there is like a descendant like divergence. You see it?
Mm-hmm.
Double click on that. Back to
Yeah,
the
I'm already zoomed
prices.
in on the RSI.
Okay, perfect.
Yeah.
So let's say that go back to the candles. Let me show you something.
Mm-hmm.
Okay, now go back um, lower to the weekly.
Weekly. Okay.
Okay, yeah, zoom down a little bit. Keep scrolling a little bit. Okay, so you can see the divergence is still on even on this time frame, and
Mm-hmm.
it seems actually that there has been forming like a triangle, or actually it's like it seems more a channel from July, let the end of June until now,
Mm-hmm.
and it seems like a triangle to me. And
Okay.
if you go back to the monthly,
Mm-hmm.
so for me, Ethereum might go back down till the minimum of June last year, kind of right there. Yeah.
Saying June
No,
of last
go,
year.
no, yeah, like the big red candle.
This
There
one.
we go.
So
Yes.
you're saying it could go down to
Yeah.
$1,000.
1,000. Yeah.
Oh man. Yeah, I could see. I could see that
And then
happening
if
for
you
sure.
see, and then if you go weekly
Mm-hmm.
again and scroll it down a little bit, yeah, you see like that, like if you like go on the, if you draw like a trend line from the bottom of those red candles,
Mm-hmm.
right, from June and then November last year.
Okay.
If you draw like if you draw like a trend line from the minimum they did from those two,
Okay.
yeah,
Okay.
red
Yeah.
candles.
I see what you're saying.
If
So you're
if
saying a
you go
trend
like
line
down to the, yeah,
like this
pardon, like
or
I'm
something.
I'm still Italian, yeah, but like with the
Yeah.
follow the minimum,
So I'm not
or
gonna draw this
even,
because
yeah, I know it's okay. I'm just saying
I
like
don't.
if you
Yeah.
if you follow that, like, and then if you check the the top part of that triangle that is forming, like
Yeah.
you see, even on the from April this year to now, the top are going down. So it seems
Yeah.
actually
Yeah.
like a triangle. So you gotta watch that, and that could be, I see an accumulation phase that has been going since
Mm.
this last months. And if you lower the time frame, you go daily, or if you go like on a 4 hours, you will see, the accumulation phases always like taking places. You see, like it's going up and down on a
Yeah.
rectangle in this case, right? For the past months, right? It didn't take any, clearly direction. Even though, like I said, if you follow the original time frame, so the longest, which is monthly or weekly,
Hmm.
even from here, it seems like, it's um, it seems like going down, right? Like,
Yeah.
to me at least.
So are you
So,
like long term? Are you
you,
more
yeah,
bullish? Are you bullish or bearish on Ethereum's price direction?
I think I consider like, yeah, a bearish position
For
actually.
sure. No, I agree with you. And based on the technical analysis I've done on Bitcoin and Ethereum, I think there might be a short term rally that we're experiencing right now, but ultimately we might see the lows that we saw from earlier this year. Um, but yeah, to get away from that, let's still have so many questions that I want to ask you if you have the time.
Yeah,
This is
of course.
yeah, we've been talking for 47 minutes, so I think this might be the longest interview Trade Delicious has ever done, which is great.
Well, unfortunately, like I talk a lot, and
That's great. That's why you're my first choice because I'm the opposite of you. I don't talk a lot, so I just I just sit here and you
so
do all the work.
you're good as a host. I'm good as a guest, right?
Yeah, yeah, for sure. Well, all right. Let's keep moving forward. So, you were talking about psychology earlier. Like, how do you manage your emotions while trading? Because even for me,
Very
as a trader,
badly. I would say very badly.
okay. But I think you managed your emotions pretty well when you were working at UniCredit and uh, the hedge funds in Italy. You were doing a pretty good
Because, like
job.
I said, like I had like a several
Yeah,
levels of control. When it's just
right.
you, it's more difficult
So,
control yourself.
would you say, as an individual, let's say I think most of the audience here, they're just individual retail traders. Is it psychologically, it's probably way harder to do this by yourself than it is to actually work as part of a team and be a part of a hedge fund or an investment bank and actually have like a team of people you can like talk to and connect with. Would you say that as a retail trader it's actually much harder psychologically to really make it as a trader versus working in the on the institutional side?
It's a big difference. Like I said, it's like a change of
Hmm.
life. It's like
Mm.
I'm still working on it, like on my like mental sanity, and my mental yeah, I mean, it's true. Like I said, like for sure having somebody behind you that gets you cover, it always helps, right? Even if you're like
Mm.
managing a lot of money, it's very stressful even like that. But if you're good, if you somebody gets you cover, and you're good to go, you're good to go. By yourself, you never know if you're good to go, because it's like I say, you have like you got to think about so many things all at once, all by yourself,
Mhm.
without anybody helping you, or like guiding you, giving you any directions. And it's like it's tough, it's really difficult. So, well, what I can say is that uh, be like a daily trader. It's rewarding a lot because, like I said, everything that you do, it's for you, right? It's your money, it's your winning, and but like you never, it shouldn't be always be enough. You never, you always constantly learn and every day it's a new day. The markets change, situation change, news change, you change. You get older and your reflection are like are different. So like it's just happened now, like your daughter just come and say, "Hey daddy, how are you?" And you just miss like something. It could happen,
Yeah,
right? And
yeah,
it's
yeah,
because you are at home, you set up your own environment, and you think, okay, I'm done. And then something can happen, and all of a sudden you have a position open and you miss that moment, the drop or whatever, and because you were just like playing and talking with your daughter. And it's everything can happen, and it's difficult, and you should really like let your emotion drive you through. And you really need to be like a ninja, like what I would consider, like we in Italy, we always say that everybody who is not from the Mediterranean regions, let's say like the Scandinavian, the Russians, like
hmm
they are cold. They have a very cold heart. So in that specific um, moment, you need to be like that. You really to be like you know glacial. You need to be like nothing has to conditioning you. So, and that's how can you survive and move on. That's what
right,
I suggest and have experienced.
yeah, yeah. I mean, it's like just psychology is just. I think that's the most important element in trading because you could have
And
like
if you
a
think
very.
it's even very like it's cool, right? Because then like you see that all these things happen to you on a daily life, right? And on a daily basis. So it's something that that affects you, the trade. it, During trading it's amplified, but basically like it's how you are in your normal days. You kind of like see how you are, how you react to external situation. And it's good because it's like a self-knowledge and it's a self-development thing that can make you grow. It can make you like talk to yourself, and realize like how you are how you are with other people, how you are responding to situation. And that's a very it's cool for me. I like that. If I wouldn't be like if I wouldn't have like study economics, definitely I would have studied like psychology, because it's
Mhm.
very interesting like what your mind can do, and what how you can like understand things by like reading the mind, reading like the action, how like people talk, how do they behave, how do they react. It's a very interesting thing. It's very fascinating for me.
No, absolutely, and I think we could even do like an entirely separate segment just talking about trading psychology because that is a big passion for me as a trader and just as a person in general. Because I actually did study
Yeah.
psychology in university, and yeah, just the combination between trading and psychology is so valuable and so important. And really, like most of the trading books that I read are focused on the psychological aspect of trading because there's so many like different strategies and technique that you can really study and really understand and really implement. But if your psychology is way off, if you're just like, if you just wake up in the morning and, I don't know, like people are bothering you and you're just I don't know, you're like a bipolar person, your head isn't on straight, then you're just not going to be a successful trader. You're just gonna you're it's just you need to have your psychology 100% or close to 100% on point. Otherwise, it's going to be very hard to make it in this industry. So, yeah, I'm happy that you have the
Yeah,
same views on psychology as I do. Um, so I guess my next question would be, well, tell us a little bit more. Like we're talking about psychology, some very serious topics. Tell us more about like what are your like your most
I'm going to make
memorable
some Italian jokes.
memorable. We'll save that to the end. But tell us what was like your most memorable win. Well, your most memorable win, and then your most memorable loss. Let's talk about both sides
Well,
in trading.
let's say that they are basically like one after the other. When you start
Hmm.
doing trading by yourself and you starting like realizing your strategy, and you see it's working, and then the first thing you do is just like power up your leverage. So
Hmm.
I remember um, one of the first time, like the Mario Draghi, like the former BCE president, starting to cutting the interest rates, and I actually was short on the euro dollar, and I think I make like probably like 5 grand in like
Mm.
in 30 minutes.
Wow, nice.
I was like, wow. I was like, what the hell? Close it. And then I realized that which is true. Like my strategy worked like either ways, either like on a bullish in the bearish, right? The divergences
Hmm.
works no matter what. For sure, it works more with a more intensity and more high win loss rate. If you actually like do a, like in a contest where in an environment which is bearish or bullish. So you consider like bullish divergency when you see that the macroeconomics or like the big picture is bullish and vice versa. So instead, like I said, oh, and because it was very volatile, the euro dollars at that time, I decided, yeah, I can, even try to follow like bullish divergence, and but the euros was going down because it was cutting the rates. So I decided to go long with the same
Hmm.
leverage, and basically like I lost the equivalent that I just won the day before,
Hmm.
the day after. So and then make me realize like how stupid it was, like but since you like until like you like experience yourself, you really touch those things, you will never believe it that yeah, somebody can be so stupid.
So what about what was your
And
biggest?
it's important.
What about like the opposite side? What was your biggest losing trade?
Like I said, like the next day I lost like the same
Oh,
amount of
right.
money.
So you're saying in the same trade that was both your biggest loser and the biggest winner at the same
Exactly.
time.
Yeah,
Gotcha, gotcha.
it
Yeah.
was
No, yeah, yeah.
a back and forth. Like yeah, 2 days in a row, big win, big loss.
Hmm. Cool. Yeah, Marshall, we're running close to an hour on this interview,
Yeah,
and I actually have a lot more questions to ask for you, but maybe we'll do
we
another
can do it next
segment.
time.
But what
That
I'll
would
do
be
now,
great.
I want to do like some quick, fun questions. You can just answer it pretty fast. You don't have to go into like a deep
Okay,
explanation. First question. All right, crypto or stocks?
stocks.
Okay. Who are your who are your trading heroes?
Sorry again, I missed you.
Who are like your biggest trading heroes or influencers that you follow?
I actually used to follow. She's an Asian girl. It's called Humble Trader on YouTube. She's super funny
Oh,
and
yeah, I think
very
I know her. Yeah,
very. She explains to you a lot of things. She's cool. I like her. She
awesome.
helped me a
And
lot in lots of situations of my life.
cool. And then lastly, what is your favorite trading movie?
Well, definitely The Big Short.
Oh, that's one of my favorites as well.
Even because all the time my friends they didn't know what happened, but didn't realize it. They didn't have any knowledge. They always keep asking me, some quotes or like some scenes of the movie they didn't understand. So I always like I have to explain to them, and I try. And you see like how much I talk. So every time like I try to explain everything very deeply, very clearly, and it takes
Yeah,
hours and hours like just to explain the scene. But it
yeah,
it
yeah,
really like gives you like you know a very clear picture of what happened, and it's cool to know
yeah.
that
No,
that was a real story actually.
yeah, of course. And that actually brings me to my last question, which is, so your favorite movie is The Big Short, and now Michael Berry, who was, uh, I guess he was like one of the main characters, that was
Yeah,
based on the movie in The Big Short. He just, I think last month it was announced that he bought a lot of put positions in the equity markets in the U.S. So it's like a
I
multi-billion-dollar
think on this
position that he
as
has. Yeah, I
I
think it
think
was
on the
either on the
S&P he
Nasdaq.
did it.
Yeah, yeah, it might have been the S&P or the Nasdaq. It doesn't really matter. But so, do you think there's a big short number two coming, or do you think no, things will be fine? Because there's a lot of, I guess, financial analysts or like financial influencers out there that are predicting there's going to be like another 2008 that's going to be even bigger than the one we experienced back in 2008. What are your thoughts? Like,
For
what's just
sure,
your
for
general
sure.
market view?
So for sure, considering the liquidity on nowadays, yeah, 2008 is gonna be like this big, and this is gonna be like huge if this happen. Like
Mm,
considering like the numbers, because liquidity is like 100,000 times more, so there are way much money involved.
mhm,
The thing is like I'm still concerned about like the geopolitical situation. I have a very close friend who is into he works for the UN, and I ask him sometimes like question about the war and all the geopolitical situation, and he said yeah that there would be a very big chance that there might be like a third war or close to it, because China is really like
mhm,
getting a lot of military equipment. They're like growing, and if Russia doesn't stop doing what it's doing, yeah, they're combined at this time. They might be equal strong as the US,
mhm,
and that could be a big problem. So I always like as a character, like I said, like I always try to bring um, to see like the good thing in anything. So I don't want to believe that something like that is gonna happen, and then they somehow like find like a truth. They will like sign like something, because
mhm,
otherwise, yeah, we're in a big trouble. So let's say that I will think that, like I said, somehow they will either like Ukraine is gonna like say
mhm,
okay, just keep whatever you want, like, and but like it's a big thing more than the house market itself. Okay,
mhm,
the house market, it's always like affected from a lot of things. Okay, but the economy I think is still strong and will be good plus like, remembering what happened in 2008, there are more concerning, and they may be, even the Fed is going to be more concerned on all the things they're going to let do it, because actually, like, they already like let the Silicon Valley Bank fail, going
Yeah.
bankrupt, but it was a small one. If you let do the small one, it's fine. The important is they don't do it the big one like they did with Lehman Brother, because there was like really a big thing.
Yeah. Awesome. One last fun question, since I am more of a crypto trader and analyst. What are your thoughts on Bitcoin, let's say in 1 year from now? What's your price prediction? Right now it's trading at around $27,000. Do you think in a year from now it'll be higher or lower?
Well, considering what we just like talk about the Ethereum, I see, the same thing for Bitcoin. So there's gonna be a huge, even because even there, like, especially in the US market, the regulation is being kind of like heavy, and
Yeah,
so
definitely.
I don't know. I don't see like a clear, beautiful view on the crypto coins for, the next year
Man,
or
well, it's
so.
gonna make a lot of crypto traders disappointed. But unless you're short on Litecoin or Bitcoin, then you'll make those people very happy. So, uh,
Let's see.
no, but yeah, we'll see what happens. Anyway, Marcello, we've been talking for over an hour now. I think viewers have
It's
had
time to go to
quite
sleep.
yeah, viewers have had quite a lot of content to digest. So maybe we'll do another like part two
Hmm.
in the
Definitely,
future.
I would love to.
For now, yeah, I really like to thank you. It's been a pleasure talking to you and learning more about your professional experience. And I hope the viewers had a good, informative, I guess, podcast, learning more about yourself and your experiences. And hopefully, we'll see you on future segments. I think this has been a really great segment.
Hey guys, Jordan here. Just wanted to send you a personal little thank you for sticking around and watching us here at Trade Delicious. If you did enjoy the content, consider subscribing. Everything we do here is completely free. And of course, we have some other video suggestions here which you might love. We will see you in the next video.